Okay, I'll tell you what, the EBITDA margins, our estimates were, estimates were at 16%. They have come in at 20.2%. So that's a dramatic 600 bips increase in margins. I dare say the Petchem division could have done it as well. Do we have Prayesh Jain with us? Okay, we have Prayesh Jain with us. Prayesh, your initial reaction, sales slightly lower or, well, actually you could say, yeah, quite a bit lower, but it's an astounding EBITDA performance and a great PAT performance thereby.
Yeah, the numbers look definitely better than what we were expecting and what the street was expecting. But also we will have to see as what is the impact of Ind AS that the company has taken on board during the quarter. So we would have worked with the previous Indian GAAP numbers. So in that sense, it has to be seen as to what is that, what are the adjustments that needs to be done to come down to the actual Indian GAAP numbers. So definitely, but on the most of the numbers seems to be better than what we were expecting. So now the impact would not be to an extent that we might see a significant underperformance from there on. But I think overall numbers are better than what we were expecting.
The GRM number of $11.5, what is your reaction on that? We were expecting 9.5, the street was working around that number. How do you think they would have reported this kind of a $11.5 kind of GRM? Because overall the sector itself is now slightly coming under pressure.
A sequential jump in GRMs is actually a very shocking number, although positive, but it's a very shocking number. The company has been delivering substantially better margins vis-a-vis the benchmarks for the past many quarters now. In this quarter, sequentially the GRMs had dropped by the benchmarks GRMs had dropped by around $2.5 per barrel, and the company has shown a growth in GRMs, and that's something which we will have to hear it from the management as to how they have been able to bring out this surprise element.
Okay, so the two most important numbers just have come in, Neeraj. The EBIT margin of refining 13.5% and over 14.2% is the Petchem margin. That's a huge beat as far as what the street was working with, and big even on a YOY basis, the refining and the Petchem both margins on the EBIT side have been a very big expansion.
Yeah, I'm sure, and I'm sure Ajay has a lot more numbers to analyze as well. But this is important. So Sanjeev Panda is with us as well. For quarters or years, Sanjeev, we've been talking about how some of the other segments start contributing for Reliance's bottom line, and clearly it seems like the Petchem has done it for this time around.
Right. Even the only thing that I would say, I'm extremely surprised with the kind of PAT number they have reported, and especially because of the GRM. We need to look at how we expect some commentary from them to understand how they can manage such a phenomenal GRM, and way above our estimate in terms of bottom line performance. Extremely good. Now the Petchem business, as you said, Petchem, I was broadly I was positive on that. The margin continued to be on the higher side, but GRM absolutely surprised.
But what's the initial reaction then? I mean, Sanjeev, because nobody anticipated this bottom line number, and it's operational in nature. I mean, just the fact that they've been able to clock EBIT margins or margins at 20% versus 14% on a YOY basis, that's a big jump. What's the reaction on the stock then?
I think it's going to be a positive reaction, obviously, and there is we have to see that, but my sense is that it's going to be a pretty strong opening on Monday.
Mayuresh?
And because if you look at most of the analysts, the entire street was having a range of 6,500 range.
Yeah, that's true. Mayuresh, Joshi, we were just talking about it a little while back. Now the numbers are out as well, and surprise on the operational front, a big surprise on the EBITDA margin, on the GRM front, and the PAT beating estimates by a record margin. I don't remember this outperformance, this quantum of outperformance from a Reliance bottom line number for the last so many quarters that I've been anchoring this piece.
Oh, absolutely, Neeraj. Again, I think GRM's way above estimates. So I think they've beaten Singapore GRMs by a big margin. And again, I think on the petchem front, the kind of margins that I'm looking at, I think the performance on the petchem front has been exceptional as well. So I think both these items are contributing to the tremendous bottom line growth that we've probably seen. So again, I think largely as I see the first cut of numbers, it has exceeded our expectations and probably the street's expectations as well on both counts. I think GRMs, the EBIT margins on the petchem business, as well as the bottom line.
Clearly it's standing out and standing out very tall. Now we'll of course be waiting for some quotes coming in from the management as well, some commentary on Jio, because I think a lot of people argue that that is arguably the most important part. And Mayuresh, what would you be watching out for when it comes to the commentary or the comments that will come in from the management?
No, largely I think one really needs to understand where the outperformance has been, because if one was really languishing about fuel oils being extremely low, which would have had a negative impact on Singapore GRMs, and you presumably assume that Reliance has a better advantage in terms of oils because diesel forms part of around 40% of its overall volumes, and because fuel oils do not compose a significant component, the diesel and gasoline cracks would have definitely helped them. But the huge margin that it is outbeat in the Singapore GRMs, the management commentary thereof and the sustenance thereof is going to be extremely crucial. What happens to their upcoming projects, I think largely the management has guided for the petcoke gasification and the PX plant probably getting deferred to third quarter FY17, the ramp up happening by fourth quarter FY17. So that probably needs to be understood in greater detail on what happens on those aspects. And again, I think in terms of the core telecom capex, the management had guided for the telecom capex to probably go up to 1,50,000 odd crores. What are the plans thereof? And again, I think the interesting aspect, Neeraj, would be the borrowing rates, because even on the telecom debt, they're probably borrowing it a few basis points above LIBOR. So once the telecom revenues start trickling in, my own sense is that the debt that they've probably taken will be reasonable enough to cover the cash flows. So I think the cash flows will be able to cover the debt they've probably taken on the telecom business. But the management commentary thereof in terms of the launch and the expected revenues thereof, if they can give any of that aspects, I think will be critical elements to watch out.
Sudeep, Reliance has now become an under-owned stock, so to say. Not too many institutions per se hold it. If this quarter and the commentary from the management and the launch of RelJio being definitive, can that change? By the way, just before I go to Sudeep, Mukesh Ambani's quote out there, he's saying that we continue to harness the power of our integrated energy and materials business portfolio. That's the quote coming in from Mukesh Ambani. They've maintained the earnings growth trajectory during this quarter as the world grappled with the newer dimensions of economic uncertainty. Clearly, every reason to be proud of the kind of numbers that have come out, especially on the bottom line front. So, Sudeep, my question was this, right? I mean, what would your advice be to your institutional clients, because it is largely an under-owned stock on the institutional front?
The valuations, so currently market is giving negative value to its telecom business. So commentary launch of the Reliance Jio and even the launch of your project commencement of your petcoke gasification and your off-gas cracker would be a significant. So if the company gives any guideline on the Reliance Jio front, then definitely we may see some kind of more involvement from the institutional side in the stock. But we remain bullish on the stock. It has given a very good numbers in this quarter.
I just want to talk to you about the trajectory from here on. We all know that GRMs have been coming under pressure, and surely they can sweat the asset, which is high Nelson complexity asset, to a certain degree in order to juice out more GRM. But what is the outlook for coming quarter or perhaps the next? Do you think GRM will remain slightly on the subdued side, or is there a possibility that it may start reviving?
Well, largely, Ajay, again, if you look into perspective on, so Ajay, I think if you look into the larger perspective, I think the cracks basically are four parts. So there's naphtha, there's diesel, and again, I think if you look at the greater part, that gasoline probably was taking a lot of sheen in terms of the performance that Reliance had meted out. Now the problem with Singapore GRMs is that it is too much dependent on fuel oils, and with the alternate fuels around crude, I think that's still expected to remain subdued. Now whether that is related to oversupply or subdued demand, I think the next few months will be able to determine that. But again, Reliance has greater advantages and synergies with its complexity variable being much higher in terms of its refining capacity, and the refining throughput has always been higher, so it's always been higher of 100, 105, 110% in that range, which probably gives it a better advantage on both counts. So my own sense is that the expectations of all these cracks being subdued, at least for the next few months, probably will be evident into the markets, but Reliance probably will outperform as it has always done. But again, I think, as I said, I think this amount of outperformance is stupendous, so one really needs to understand from the management whether they'll be able to continue delivering such a performance going forward as well.
Right, Mr. Panda, you know, the analyst community is pretty eager to know what is the response to Reliance Jio test runs which have already happened, and perhaps want to know more from the management as well on those lines, because the big capex has been in there. I see that the management has indicated that 1.5 million users have already logged in and are sampling you know, their Rel Jio offering on their network. How does this number, what is your reaction to this number? The soft launch itself has got 1.5 million users, because there have been some numbers doing the round that in order to achieve break even, they'll need to have at least you know, some amount of pull as far as the Rel Jio offering is concerned.
Look, these are the numbers which has been indicated, but factually how much, you know, how many guys will actually get into it, that will all depend primarily how cost sensitive or how price sensitive, I would say, their offers would be, and what are those you know, offers eventually will come out to. As far as I know from some of the sources, the products that or the services that they are going to offer are tremendously you know, high in terms of value addition, but the pricing front and how many people will eventually get into it, that's a very difficult thing to gauge at this point of time. So I am keeping my finger crossed and not really factoring any number at this point of time to you know, factor my bottom line numbers. Whatever numbers as you discussed are all there. Those are the numbers roughly we have been also, you know, taking care of, but not really looked into the bottom line and how much it could impact. We have not really worked on that.
Right. I would like to just discuss one more detail which has just come in. You know, till couple of quarters back, we were talking about how the balance sheet of Reliance is net of cash, actually debt free. But the numbers which seem to be coming seem to be suggesting that now they have a total debt of 1.86 lakh crore, whereas the cash on the books, which I just discussed, $13 billion, adds up to just about 90,000 crore. So the company has started piling on a little bit of debt, though cash generation and cash flow is not a problem at all for them to service this debt. But it will be interesting to see how the analyst community reads this, you know, piling up or adding on the debt on the balance sheet. Mayuresh, what is your reaction to it?
No, debt has been steadily increasing, Ajay, for the past few quarters, because I think if you look at the core capex, their core capex itself is close to $18.5 billion, and in fact in the last quarter I think they had upped their capex almost by $1 billion for their core projects, which is the petcoke gasification, the off-gas cracker, and even the polyester expansion, along with the sourcing of ethane. So clearly, if you look at this aspect, I think the expectations of debt increasing on the balance sheet was always there. And again, I think if you adjust that with the net cash that they've got on their books, the point comes out very, very clearly. I think the kind of debt they've taken for individual businesses and the capital employed in each of these businesses, the petchem and the refining businesses cash flow will be pretty strong. You've probably seen huge amount of capex going into the telecom vertical as well. What kind of capitalization happens there would be an interesting aspect. But again, as I pointed out, I think the kind of interest that they've probably taken their debt at a few basis points above LIBOR, as the revenues start flowing in, even on the telecom vertical, I'm pretty sure that they can service their debt quite comfortably regarding the cost of borrowing that they've probably got on that debt.
Okay, you know, I'll come to Sudeep after this, but I just want to once again revisit what Mukesh Ambani is saying with regards to this quarter, because it's a very important quarter. It's in terms of the kind of delivery that they've done. it could well mark a bit of an uptick into Reliance on Monday morning, maybe for the next few sessions, if you will. And it's of course talking about how they continue to harness the power of the integrated energy and materials business portfolio, and how they maintain their earnings growth trajectory as well during these difficult times. So it's exactly what he's saying. Not too much of talk as of now that I have on the court plates either from what the future is likely to be like. They are of course saying that Reliance business environment remains challenging in the US shale business. And yeah, as Ajay was saying, Reliance Jio, over 1.5 million test users on network. Sudeep, I think Sanjeev Panda was making an important point. Having 1.5 million test users when you're giving first 3 months free and a lot of data points are available at a very low price is easy. The challenge is to retain them once you start paying money. And when Reliance launched the cell phone business some time ago, this was the problem they're there to grapple with. So would you essentially go on the number of users, Sudeep, that they have, or would you look at some numbers trickling in before you mark any kind of upsides coming in from the telco business?
See, even the number of users that they have acquired in the test run is pretty small. So probably we'll wait for another 6 to 8 months after launch, and we'll see how the number of additions, consumer additions that they do, and that would be a key determinant to give the future of the Reliance Jio, because they are going to invest roughly about 1,50,000 crores, and unless they get a limited number of a good number of users, probably they will not be getting that kind of your margins that they are looking for.
Mayuresh, for you, would it essentially only be upsides that will come in from the telco business whenever it does start coming in, or could there be issues with this as well? Because as I was saying, I mean, I have a couple of people in my office as well having these demo versions with them. There are a lot of freebies associated, the speeds are great, and therefore people are happy using it. You don't know how happy they will be once they start charging money for it.
No, largely I think if you look into the kind of estimations that one really is making on the street in terms of addition in number of absolute customers and the pricing patterns thereof, I think it's going to be a simple strategy for Reliance going forward. A, to garner market share at the beginning, and then probably start looking at price increases thereafter. Secondly, I think if you look at the core financials and associated costs related with the telecom business, again I think I'm not penciling anything into numbers specific from the telecom part at this point of time, even for FY17. But largely I think with the kind of capex that we've probably seen, that might have some amount of drag in terms of the profitability generally for the telecom vertical, and that drag might well continue into the first half of FY18. It will be interesting to note what the management has to say about all this. I think it's too premature probably to make estimates in terms of what pricing will come through and what kind of patterns it will develop on the financials. But again, I think largely it is presumed that the drag on profitability might well continue into the first half of FY18.
Right. In fact, the press release has just opened up where Mukesh Ambani is saying that though Asian refining margins are coming down, it is because of the high Nelson complexity of their asset, which is the Jamnagar refinery. They were able to take out, more from overall refining sector. But Sudeep, I would like to ask you, in this, massive beat of refining sector side or even the GRM number, how much could be the contribution coming in from inventory gains? Because this time round, there is also, estimates that this quarter there will be inventory gains to refiners rather than, inventory losses in the quarter gone by.
Correct. So if you look at the closing to closing basis, your crude oil price have jumped roughly about $25% in this quarter. And if you look at the light heavy differential, it is almost closer to at a similar level of the last quarter. So we were expecting a GRM of about $10.2 per barrel for this quarter, and which was including about $2 per barrel of your inventory gain. But looks like they have registered a very good inventory gain for this quarter, which has probably propelled the total profit for your refinery segment.
Yeah, it has. So Sudeep, I come back to this question again, for people who are tuning in right now and looking at this number, at the bottom line number looking so good. Sanjeev, actually, let me come to you. We haven't come to you. Sanjeev, I want to come to you. At the start when I asked you this question, you didn't quite give me the answer that I was wanting. So I want to know again, Monday morning, when you go out and talk to your clients, would you be telling them to buy into Reliance Industries even if it opens 2, 3, 4% higher?
I think 2%, certainly it's going to open. I'll not be surprised if it is going to open 2% upside. And still, why not? Because the kind of number they have delivered and the overall momentum in the market seems to be on the positive track. So, yes, certainly it will continue to be on the buy.
You be doing? I mean, it's been, I don't know how many years of stagnant performance by Reliance. I'm not saying that, you know, one swallow doesn't make a summer, but would this quarter be the start of things to come? And of course, it will depend a lot on how GRMs shape up, though. Yes, I must say I'm very surprised with how they've done the GRMs this quarter. I mean, it's been a remarkable performance. But Petchem, with the kind of margins that they've clocked in, Geo may be starting to contribute. Could this be the start of the turnaround for Reliance? And will it make a definitive move higher from where it is right now over the course of the next 6 to 9 to 12 months?
So was that for me, Neeraj?
Yeah, Mayuresh.
Okay, so I think if you look at the performance so far, I think it has been very, very encouraging for Reliance Industries. And again, I've been saying this repeatedly over the past so many quarters that Reliance is a long drawn out story. Largely, I think once the new plants start coming in, whether that be the petcoke gasification, their PX plants, I think it's going to be a huge value addition in terms of operational efficiencies kicking in. Secondly, I think if you look at the kind of performance that they've delivered on the GRMs, again, I think one might factor that with the inventory gains in this quarter, because I think crude basically jumped from $35 to $45 from a quarter-on-quarter basis. But largely, even if you discount that factor off, the GRMs still remain very healthy because of their complexity of probably having high, light and heavy crude being processed. Thirdly, probably I think what you're probably looking at in terms of their core capex, both in terms of key projects as well as the telecom part, probably reaching their higher end, and probably there is no capex that amount and that substantial quantities to probably follow over the next couple of years. So I think if you take all these factors into account, you'll probably see substantial improvement in ROEs, which have probably got subdued because of all these reasons. And again, I think the huge capex on the telecom part. And again, largely, I think if one really assumes real earnings, I think the real earnings should start trickling in FY18. So as a view, I think yes, the stock probably is expected to deliver. It might have underperformed over the past 4 quarters, but again, I think if all these improvements start happening in terms of core efficiencies and operationally, if I assume these things start materializing from FY18, a lot more gains probably can be seen operationally, and that will probably be seen in the bottom line as well as on the ROEs.
Right. Sudeep, we've discussed the quarterly performance. In fact, all of you, we've put, almost every indicator of the numbers released. But let's compare it with what the clients, some of the clients are actually on the buy side. What are their preferences? Sudeep, I'd like to understand from you, when you are interacting with your clients to, on oil and gas stocks. The large one, of course, the behemoth is Reliance. But towards which side is their preference going in? And are you witnessing people still wanting to come to Reliance Industries, some new money, some long only money, because the price is maintained around 1,000, knowing that the Asian refining margins are coming down, the price has not really cracked big time. So share with us some insights on what you're talking to your clients about this space and in Reliance in particular.
So in Reliance, clients are concerned about their development on your Reliance Jio and the delay in the Reliance Jio. So probably they are giving more weightage to the Reliance Jio launch and the performance on that. So if the company gives any guidance on the Reliance Jio launch in this today in the analyst meet, then probably they will give us some kind of that will give cheer to some of the investors, and definitely it is under-owned stock. So we may see if this kind of a performance continues, and if they give a good guidance on your Reliance Jio, and even though your petcoke gasification and your refinery off-gas cracker plant, then probably we'll see some kind of interest in amongst the investors.
Right. In fact, that brings me to my next question, Mr. Panda. from the management side, what are the couple of factors you would want to watch out for, in detail? Because there have been, in fact, quite a lot of surprise in this particular performance of theirs.
One is that the latest capex that they have done in the downstream businesses, how far one or two projects that are left out to be commissioned, what is the progress on that part, and what is the incremental thing that they are going to get, what we have already expected a couple of quarters back. That things how they are shaping up. That is one thing. Second is that regarding Geo, certainly like what are the expectations, how they are going to, when they are going to launch, and how things are they look at, because there are a lot of factors that we need to understand, because it's a completely new business for them. Apart from that, maybe on the oil and gas side, how things are shaping up, maybe in the domestic side, the regulatory issues, maybe on the international side, what their strategy, considering global oil prices seems to be a new new horizon at this point of time.
Right. Mayuresh, we spoke about how Reliance could actually open slightly gap up with this kind of performance. But what kind of rub-off effect do you expect to see in some of the other refining stocks? Because they are also tend to, read how Reliance has done in the results, be it the large ones, the OMCs, or even the smaller ones, the Chennai Petro or, MRPLs of the world.
No, largely again, Ajay, if you look at the OMC pack or the refining pack on the domestic scene, they are pursuing huge amount of capex. The throughput there has been equally good. So if you take any downstream company, I think you will see the throughput being extremely high. Secondly, I think what really needs to understand is that the marketing margins is going to be a very key component for a whole host of these downstream companies. Now, you've already seen auto fuels getting deregulated, and you've seen that bump up happening in cash flows improving, working capital constraints going down, net debt levels going down, and that's showing a huge trickle-down effect in the bottom lines probably sustaining and improving. But it's the marketing margins that is going to be the next driving factor for a whole host of these downstream companies. And again, a few of these downstream companies have commissioned their refineries with good complexities. So if I see Bathinda, if I see the IOC complex, I think they are extremely efficient complexes going forward. So even on the GRMs front, where we used to see very divergent data for a whole host of these downstream companies, once these complexes start coming on stream over the next few years, you'll probably see stability happening in front of processing of light heavy crude, even on their front, and sustainability on the GRMs happening on that end. But again, I think the kicker till that point of time will be increase in marketing margins for downstream companies.
Okay, let's get closing comments from all of our experts. Prayesh, Sudeep, Sanjeev and Mayuresh. Sanjeev, what's the pecking order in oil and gas? Reliance now climbs up a few notches, I'm sure, but is it Reliance? I know your answer. You mentioned that you would buy it even if it opens a couple of percentage points higher, but is Reliance the top draw, or would you prefer some other stocks in the oil and gas space?
Sorry, in the same space or?
In the same space.
No, for me, Reliance is my top pick at this point of time in this space.
Wow. So, well, Sanjeev Panda believes Reliance after these numbers is the top pick in the oil and gas space. Sudeep, what about you? What would your top recommendation be from this pocket, and what would the advice be to clients on Monday morning on Reliance?
So in oil and gas space, we have GAIL as a top pick, but Reliance more or less depends on how the management guide in today's analyst meet. But definitely we have a buy rating on Reliance and we are quite bullish on that.
So okay, so a follow up there, Sudeep, what would you want to hear most closely from the management of Reliance in the analyst meet?
Launch date on Reliance Jio and some guidance, some their customer additions data or guidance on that front.
Okay, and what's the current price target, Sudeep, that you have on Reliance, and what would you revise it to, or I am a facey because of these results, and assuming that the other answers are satisfactory?
So we have a buy rating with a target price of 1200 rupees, So revision, it depends on a lot of things.
Okay, fair
We
call.
need to go into the details of the result as well.
Yeah, I'm sure you have to. I was just wondering a ballpark estimate because I think these numbers have been very, very good. Mayuresh, similarly, before we start wrapping up or before we wrap up this discussion, what would you be doing come Monday morning on Reliance, assuming that it opens about 2.5%, 3% higher?
No, again, so largely I think, as I said, the story is long drawn over the next 2 years. What has probably happened in terms of core capex will start getting delivered over the next few quarters, and again I think that will get reflected how efficiently they are doing it on the operational or the EBIT front. So yes, it's a long drawn out story. I think my personal belief is that FY18 will be a beautiful year for Reliance. I think they can deliver tremendous numbers on the refining as well as the core business of Petchem.
Well, let's see. It's also important from a market's perspective that Reliance starts performing. We have a bit of a problem in IT. Let's see if Reliance can counter that. Thanks so much, gentlemen, all of you, for taking the time out and joining us and giving us your thoughts. With that, it's a wrap on this special coverage on Reliance Industries. Numbers, must say, a very good quarter, and this should help the markets. The GRM's outstanding. Don't know how they did it, but they've done it. The PAT number is much, much higher than what anybody was working with. In the EBIT margins too, the margins by and large substantially higher than what people were working with. Almost a 400 bips beat on the margins front. Thank you so much for watching this coverage.